After the close, HP Enterprise and its spun-off printer business, HP Inc., reported results. HP's earnings matched estimates, but the CEO warned of slowing sales in the current quarter. And HP Enterprise topped forecast, but also gave a disappointing forecast. CEO Meg Whitman outlined where she sees growth for the company. Take a listen.
With this portfolio, we estimate we have a total addressable market of over $250 billion. And within that, there are areas of very high growth, like high-performance compute, private cloud, software-defined networking, and industrial IoT. We are already well-positioned to lead in these areas, and you will see us continue to invest in a targeted way.
Crawford Del Prete, Chief Research Officer at IDC, joins me now via Skype. So, Crawford, first of all, you just got off the phone speaking with Meg Whitman herself. What did she have to say?
Well, basically, similar to what you saw on the call. I mean, what's interesting is Meg talks a lot about remaking Hewlett Packard Enterprise. They're really a company that's focused on the enterprise infrastructure space. And I think what people need to get their heads around is that the enterprise infrastructure is changing. It's not going away. You have to, build out the cloud. You have to build out what's in private data centers. And as you just, talked about on that clip, this kind of industrial Internet of Things. There's so much data that's at the edge that Hewlett Packard wants to capitalize on. But what's different is, and what Meg talks a lot about, is building a different size overhead structure, building a different infrastructure to support, a company that's just not as big. And you're seeing that as the company hits its one-year anniversary of Hewlett Packard Enterprise's transformation, where, they've gone through a lot of restructuring, whether that's spin mergers and services or spin mergers and software. What we're starting to see now is this new enterprise infrastructure-focused company emerge and, make business choices that are really around how do they capitalize on better margin pools within that really core infrastructure space that can be quite competitive.
It's interesting. Clearly, when HP split, not a lot of people saw the election of Donald Trump coming. And in a discussion about M&A yesterday with David Kirkpatrick, he suggested that bigger could simply be safer in today's sort of unpredictable environment, not knowing what's really to come in a Trump administration. Do you think two HPs are better off than one HP with Donald Trump running our country?
Well, I really can't comment on that. What I can focus on is what you're seeing emerge in these companies. I spent a lot of time with both Hewlett Packard and Hewlett Packard Enterprises. And what I would say, if I could sum it all up in one word, it's focus. And this company, through their focus, really has a lot more options because the sales team is more focused on what they're selling. The products, the absolute amount of time they can spend on crafting the portfolio, that kind of stuff is just stronger than it's been in the past. And you really saw that in the Hewlett Packard, in the HP Inc., the PC and printer companies, PC results today. I mean, looking at that, you basically saw the Personal Systems Group, growing 4%, and that's significantly faster than the market. That's on better execution and better products. So as far as what person is in charge, Meg actually on the call did mention she didn't see the election had a significant impact on near-term results. Longer term, it's tough to tell at this point.
Quickly, Crawford, what sort of progress do you expect to see with regard to HPE in the cloud, given the giants that are now Amazon, Microsoft, and even Google?
Yeah, so what HPE is going to focus on is helping companies that still support, hybrid cloud infrastructures have the absolute best infrastructure, and they're going to go after the highest margin pools there. And then don't forget that HPE also has significant relationships with folks like Microsoft Azure, and they want to, with their Cloudline servers, be able to have profitable deals in that business, which is incredibly competitive. And that's where you really want to benchmark them. Can they be profitable over time supporting the public cloud? And that's really a big part of their strategy.